You're watching What's On CNBC TV 18. It's another mega deal in the making. Global pharma major Merck has said that it would acquire Schering-Plough for a whopping $41 billion. On What's Hot tonight, we ask, are there more M&A deals in the offing in the global pharma space? To answer that, Sujay Shetty of PwC, Vikas Dandekar from NewsAsia.com on the phone line join us. Thank you all for joining us. Sujay, let me begin by asking you, more other than the specifics of this $40 billion deal, is this industry coming to terms with patent expiries, blockbuster drugs, living out their lifespans? So in a sense, are these deals inevitable?
These deals are inevitable. You know, in this particular deal, Merck gets clearly two things. I mean, first, it needs to fix that patent expiration and the revenue loss that comes from it. So it gets a bigger basket of products, late-stage drugs to play with. And the second foremost one is access to emerging markets. They wanted to put it plumb dead bank center in the next wave of the strategy. So they get those two. There's an opportunity for further cost reduction. So yes, Big Pharma is coming to grips with the fact that, you know, the future years will be less blockbuster driven and they need to do something about the revenues going off.
Right, Sujay, before we talk about the impact on emerging markets, and especially countries like India, let me put to you the other big deal that is expected, Roche and Genentech, $45 billion. What's your gut, given what we have heard now from Merck and Schering-Plough?
Yes, I think, and as Vikas would also testify to this, that should go through because Roche are already in bed with Genentech, and though Genentech has been trying to act very fancy by looking around for other suitors, and Roche too, by trying to intentionally keep it very conservative, I think the values are kind of coming close to where Genentech would want it. And that now creates two behemoths. I mean, you've got Pfizer-Wyeth, which is clearly a game changer right up front, followed very closely by Roche-Genentech, and that should go through, followed by Johnson & Johnson. Really, it's a race for the rest of the big pharma to catch up with these three in terms of market cap, revenue and numbers.
Vikas, let me put that question to you. So second wave of pharma consolidation on the cards now, Roche Genentech to go through?
It looks like it will happen. Genentech being what it is, known as an iconic brand in terms of biotechnology, and they had actually asked for $100 per share. And slowly but steadily, Roche is reaching there with $93 per share bid. Which takes it to $46 billion. So I think now there will be less for the Genentech board to really talk about a hostile kind of a game. It should work according to me. And as Sujay was also mentioning, consolidation is the end game, and more the merrier so far as pipelines are concerned. There are such tremendous pipeline challenges. No new products coming. Phase 3 pipeline really looking weak. All of these companies will have to look at a realignment of forces.
Because very quickly on the dynamics of this deal alone, any impact at least on India as far as Merck or Schering-Plough is concerned?
In fact, Merck have also categorized, that it will be targeting emerging markets, and in the emerging markets which it will be present, it will be wanting to be in top 5 in the next 5 years. And I will refer to a IMF health report which spoke about emerging markets, which comprises of Mexico, Brazil, China, Turkey, growing at about 13 to 14%, comprising about $100 billion, as compared to US and European market, which will be growing at 1 to 2% for 2009. The figures tell the truth, and that's where probably most of these companies will want to concentrate.
Right, Sujay, what about domestic consolidation now? Because we're seeing big pharma globally get together, but we haven't seen that sort of action, aggressive action really in the Indian domestic space. Are you hopeful now that we are going to see that go through?
I hope so, because in the past it has come unhinged on the basis of valuations that were demanded by Indian promoters. So that was a clear bottleneck because they saw the fall in market values and didn't want to do deals at these prices. But having said that, the kind of companies that will be created locally by these global consolidations will catch up with them sometime 3, 4, 5 years down the road when these companies like Pfizer-Wyeth and the current company that we saw today with Schering-Plough, Merck, these are going to be very significant players when you look further ahead 5, 10 years down, because they've made the emerging markets as right dead center of the strategy. So I would hope that it would act as triggers in the near term for some of the Indian promoters also to, relook at the strategy and sell out.
Sujay, very quickly, this deal is about $41 billion. You talked about another possible $45 billion deal in the making.
Yes.
These are supposedly terrible times where there is no money flowing. How in the hell are $40 billion deal being made? Who's funding them?
few things. Firstly, pharma, for all its supposed ills, the big pharma has plenty of cash and they fund it out of their cash reserves. The second half is lending by banks, both in the earlier deals, the Pfizer-Wyeth, where 5 banks lent in, and for this one, where JP Morgan has tied up funding. These are the deals that you want to lend, and President Obama has been leaning on banks saying, please lend to good worthy deals. These are great deals, good cash-rich companies. Pharma is very defensive, very anti-cyclical. So here are tremendously cash-rich companies doing big deals, and so it's easy for them to raise money. But these are not the kind of size of deals that private equity can do just now.
All right, let's hope for the better, though. Thanks, Sujay Shetty. Thanks, Vikas Dandekar, for joining us with that perspective.